Hi there, I'm Dan Artis, and this is your weekly update. Let's talk about what's going on with the economy and interest rates and what it means for you. The Federal Reserve has two main goals, which is keeping inflation under control and supporting the jobs market. This last week, we got some good news on inflation. The PCE index, which is one of the Fed's favorite measures of inflation, just rose 0.1% month over month. And that is encouraging because slower inflation increases the chances that the Fed may lower interest rates in the future. Now, this week was all about jobs, and the data was a bit mixed. ADP, the giant payroll processor, reported that US private employers added just 37,000 jobs in May, and about half of the industries they track actually saw job losses. Then today, we got the official jobs report from the Bureau of Labor Statistics, and it showed that the US added 139,000 jobs in May, which was slightly higher than expected. But here's the catch. The previous 2 months of jobs numbers were revised down by a combined 95,000 jobs. Kind of makes you wonder, would the Fed be keeping rates this high if they had seen the revised numbers first? For now, the market expects no rate cuts for the upcoming Fed meetings on June 18th or July 30th. So it looks like the Fed is inclined to keep rates paused a while longer. Now, here's a quick note. I've been getting a lot of questions from clients lately about two things. How close are we to be able to refinance our existing loan? And two, how can we tap into home equity for major renovations or even to buy an investment property? Now, if you have similar questions to those, or if you want to just walk through your options, don't hesitate to reach out to me and I'd be happy to help. Well, that's it for this week's update, and I will see you next week.